Welcome everyone to a new video of ATFX. My name is Gonzalo Cañete and I'm here to share with you a report in relation with UnitedHealthe Group. And particularly, we're going to review past results, we're going to review estimations, we're going to review also fundamental data, incomes generated, context, historical context and the current moment for this company. And of course, at the end, I'm going to share with you a nice and clean chart with projections, price projections, main supports, resistance and levels to keep on your radar if you are interested on this company. Let's share the screen and start to see everything in detail. Let's start with growth expectations. The growth expectations for UnitedHealthe Group is about 9.33% year-to-year growth expected. Revenues expected reach to $91.43 billion of dollars. An increase compared with Q2 of 13.03%. Really good performance. There is a few companies presenting results next Friday 13. And from those ones I have been reviewing, UnitedHealthe Group is the one that is actually giving better results for this quarter than the previous one. In terms of EPS, we say that on 14th of July, the EPS, the earnings per share, the dividends pay, it was 6.14, and the current one is 6.36 expected, right? It's also true we need to take a look on these red triangles. I'm using the data provided by Seeking Alpha, and the red triangles in Seeking Alpha means how many times this has been downgraded or reviewed negatively. Therefore, it means like if the expectation was this, 18 times at least, those expectations had been reviewing negatively, had been saying, okay, maybe we need to cut the expectations or shorten the expectations. Only 2 times has been reviewing positively. It means like there is a high chance based on that ratio that the results could be actually worse than expected. Still, the expectations are really good. It's again a higher EPS than the previous one. However, the revenue estimated is lower than the previous one. The previous one was 92 billions, 92.990, or almost 93 billions of dollars in net revenue. And the net revenue estimated right now is 91.41 billions, little bit lower. Analyze data. If we analyze all and we put in long-term numbers in the whole year, expected earnings per share is 24.83, really good number. Revenues expected is 368 billions, and improvements or growth compared with the previous year is between 11.9, 12% to 13%. Total revenue per year is so clear, so clean, that has been rising really harmonically, really softly. So it's give to you the idea that this company is doing the things well in a stable manner. There is no volatility, there is no sharp increases or decreases or drops on these results. However, there is a few things that we need to consider in the long term, and especially for the recent previous 2 years. The pandemic, the COVID-8 has been affecting especially this sector, the sector of health, in many different ways, positively and negatively. So we're going to analyze here what was the effect of the COVID for this company in the last couple of years. But again, as you can see, total revenue per year is really clean. It has been rising nicely and harmonically. Now, what is the current context? In the current context, the COVID pandemic has had a positive impact on health insurance initially. Initially, my friends, initially means like initially it was positive for the company. Why? Because most of the people were not claiming by then any medical services. The people were just keeping away from the hospital. So people were not going to hospitals during the pandemic. They were trying to keep away from the hospitals. We got a clear message on the TV, on the media. It was like, please stay at home. Please do not saturate the health services. There was a slogan, a clear message sent to the whole population, and I believe that one of the main reasons why the people were not actually demanding medical services during the pandemic, right? But this repressed demand has led to a sudden increase in demand for medical services, accelerating medical costs. Boom! This is the contra effect, this is the boomerang that most of the health companies, health services are facing right now. That if there was no people demanding medical services by them, they experience right now a sharply increase on those demands, on those the demanding of those services. Also, I will say something has been suggesting regarding this topic recently, which is, well, because that people were not going to the doctors by then for a year and a half, it means like maybe some of them by now get certain medical problems, health issues that implicate now long-term treatment, because we're not being treating at the right moment during the pandemic, and therefore could be more chronic diseases on those ones under the insurance right now. So this could, stress a little bit the health services in US. Strong expectations. This is a potential risk. Why I put strong expectations as a potential risk? Because if our expectations of the company are so good, the chances to get surprised negatively are higher, just because our expectations are so high. So in life happens many times, right? Where if your expectations are so high, it's always test worse than you expect, right? Key factors: medical costs, number of insurance members, and continued growth. So this is the main factors this company is monitoring. The medical cost they got is increasing right now, they know that, but also a number of the people under the insurance is dropping. The number of clients they got is dropping a little bit. So this could flat, and that's why exactly the chart reveals. Unpaid claims. You take a look at unpaid claims, it was completely flat from 2019 to 2022, which means 2022 was a break for UnitedHealth Group, but 2021 and 2022 are rising, and I will even say rising strongly compared with the previous years. This is one of the main signals that unpaid claims, rising, is one of the main effects of that demand content or repressed during the COVID years. Okay. Outlook for 2024. The thing is, this situation we just described, it seems to be probably keep on going for the coming year also. Looking ahead 2024, an increase in medical care is expected through the year, which could impact revenue because it's going to affect the cost of this company. Additionally, there is no concern about increasing medical costs with declining enrollment numbers. Dropping the number of clients under the insurance, increasing the number of medical costs, not so good. Could stress, could squeeze a little bit the revenue of this company. And still, remember, we have been reviewing the revenue, has been really nice and clean for the last few years. Finally, time to take a look on the chart and time to see what the price really discount on the chart, what exactly the chart is telling to us secretly, right, in this projection. So there are many arrows on this screen. I put many arrows there because I want to highlight and emphasize how strong are these supports, how strong is this resistance, and how we are actually right now between those $453, $452.50 per share and $550 per share. We're in that $100 range, you see. We are more close to the top level with a $523 per share. I believe that most likely we're gonna touch or test those $550 per share in the coming days. Even if I can draw, let me change the tool. So this, in my eyes, my friends, I believe it's a very bullish pattern that is getting broken right now. So if this pattern is true, if what I see is true, after this downtrend, this is pushing the price up, it means like we're gonna see a continuation of this move. It was a whole bull trend, a pause in these lateral runs. This pattern is indicating that eventually an aggressive uptrend could start here again, and if that movement starts, it's gonna break out probably the resistance of 550, and if that happens, the projection is taking us most likely to the $650 per share. Amazing, really good one. So worst case scenario, guys, be careful with the level of $550 per share. Please remember, I'm not here to give any advice. I'm just sharing with you my view on the chart. But this is not an advice of any kind. If you are considering to invest in financial markets, actually, my duty is to remind you that you should consult with a financial advisor first, okay? Again, the levels I see is worst case scenario, price is probably gonna move to $550 and there get a stock by the resistance. Best case scenario, that bullish pattern is activated, pushing the price about $550 per share and therefore projecting to the next goals or targets, which could be new maximums of $640, $650 per share. That's all from my side. I hope you really enjoyed this chat report, and let me just share with you my contact, my name, and of course, if you want to share any ideas, any comments, any questions, you can leave on the bottom of this video on the comments, or you can even send me an email. And if you want to suggest any topic for the coming videos, please share also with me. And by the way, of course, if you like the video, please click on like and subscribe this channel, okay? Take care, guys, and good luck with the market. Bye bye.